You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.
The options market can be a confusing place. Sorting through the daily avalanche of data, alerts, updates, articles, and analysis to find the most important information is an overwhelming prospect. But now you have help. Welcome to the Options News Rundown, the only program that breaks through the noise to bring you the most important news and information from the world of options. Every day, we bring you the top 5 option stories curated by the options experts at theoptionsinsider.com, the premier source for options information. The Options News Rundown is brought to you by Market Taker Mentoring, the leader in options trading education. Get trader education, daily trade ideas, and more with a free 1-week trial of Market Taker Mentoring's Live Advantage Group coaching class by visiting markettaker.com/insider. And now it's time to break through the noise. It's time for your Options News Rundown.
Good morning. Today is Friday, March 8th, 2019. This is your Options News Rundown. I'm Dan Passarelli. Our first story today is from investing.com. It's the top 5 things to know in the market on Friday. The first thing to know is there was another solid jobs report expected and a focus on wages. All eyes will be on the U.S. employment report for February to be was released at 8:30 a.m. Eastern Time, which is expected to show another solid month of growth despite a slowdown in payroll growth. Economists forecast that the economy added 181,000 jobs last month, pushing the unemployment rate down slightly to 3.9%. Barring a big beat or miss on payrolls, the market focus should be on wage growth, which is expected to have heated up in February. Wage inflation so far has lagged expectations given the tight U.S. labor market, allowing the Federal Reserve to be patient with policy tightening. Average hourly earnings were expected to rise 0.3% for the month, bringing the year-over-year gain in earnings to 3.3%. Policymakers are watching the annualized reading closely to gauge upward pressure on inflation. Realize at the same time, traders will pay close attention to data that gauges fragility seen in the housing market. Economists expect that housing starts will jump 9.9% in January, but building permits, an indicator of future demand, are forecast to have fallen 2.9%. The second thing to know today is China adds to global economic gloom. China delivered more signs of economic weakness overnight with its trade data for February. Exports fell the most in 3 years, while the world's second largest economy and largest trading nation also saw imports decline for a 3rd consecutive month. The data added to concerns over global economic outlook after China already cut its 2019 forecast for growth to a range of 6% to 6.5% earlier in the week. It's down from 6.6% in 2018. Developments in trade were no more encouraging as the U.S. ambassador in Beijing briefed media that a summit tentatively scheduled for the end of the month between President Donald Trump and Xi Jinping had been pushed back as the two sides weren't confident of reaching a deal by then. The third thing to know today is stocks drop as China data stokes global slowdown fears. Related story. China trade data increased worries over the global slowdown, driving stocks lower on Friday. Asian stocks tumbled with China's Shanghai Composite leading the decline with 4.4% of a tumble, while Japan's Nikkei ended down 2%. European stocks followed the general malaise as a surprise slump in German factory orders reinforced a woeful sentiment, sending indices lower. U.S. futures also pointed to a lower open pre-open. Oil companies are particularly in focus after Norway's government said its sovereign wealth fund should sell its shares in oil and gas companies to focus on more environmentally sustainable investments. The fourth thing to know today is the euro attempts recovery from a 21-month low. The euro registered a slight bounce against the dollar on Friday, recovering from a 21-month low hit a day earlier as the European Central Bank cut its growth forecasts and failed to convince markets that its plans to support lending would give the economy any meaningful support. At 5:40 a.m. Eastern Time, the euro versus the dollar had gained 0.2% at $1.1213. It had hit a low of $1.1171 overnight, its lowest against the dollar in nearly 2 years. The ECB's forecast validated market fears of a global economic slowdown that were further reinforced by Chinese data overnight, and its actions, while meant to soothe nerves, only served to draw attention to the lack of progress in the region at addressing its institutional and structural flaws. Mixed European data released Friday allowed the single currency to take a breather. An unexpected decline in German factory orders appeared to be offset by further than expected industrial production data from the other three largest Eurozone economies, France, Italy, and Spain. The fifth thing to know today is oil slides as economic weakness ups fears of lower demand. Crude prices slumped on Friday as the negative Chinese data stoked worries of the negative impact on demand from the world's largest oil importer. Those China numbers. U.S. crude oil futures fell 94 cents, or or 1.66% to $55.72 by 5:40 a.m. Eastern Time, while Brent oil traded down $1.22, or 1.84% to $65.08. Along with the string of negative signs for the global economy, investors are watching escalating production in the U.S. that remains at record highs. Baker Hughes will release its weekly rig count data, an early indicator of future oil output, at 1 p.m. Eastern Time. Our second story today is from NASDAQ.com, buybacks on a tear, despite political attack. Of late, Democrats have been vocal against the corporate use of cash for stock buybacks. At least 5 potential Democratic presidential candidates aim to limit how much stock U.S. companies can buy back from its shareholders. They intend to bring about a bill that should insist companies to invest more in their employees before buying back its own stock. The bill will prohibit a company from buybacks unless it invests in workers and communities first, including things like paying all workers at least $15 an hour, providing 7 days of paid sick leave, and offering decent pensions and more reliable health benefits. Not only this, Florida's Republican Senator Marco Rubio also joined the chorus, having proposed changes in the capital gains tax, which can dissuade corporations from buying back stock. And that brings the question why the backlash and buybacks are soaring. U.S. companies repurchased a record $1 trillion in stocks in 2018, and that momentum is showing no signs of easing this year. Buybacks last week were more than $1.4 billion and are now up 58% year over year, per Bank of America Merrill Lynch data. The binge is not only limited to large caps, small cap companies have also warmed up to this euphoria. Our third story today is from CNBC.com. Job creation grinds to a near halt in February, and wages are still on the rise. Job growth came to a near halt in February after a blistering start to the year, with non-farm payrolls increasing by just 20,000, even as the unemployment rate fell to 3.8%, the Labor Department said on Friday. It was the worst month for job creation since September 2017, when two major hurricanes hit the employment market, offset somewhat by a solid increase in wages. The month fell short of the relatively modest expectations of 180,000 from economists surveyed by Dow Jones. The employment rate had been projected at 3.9% from January 4th's 4%. And that, ladies and gentlemen, is news you can use for today, Friday, March 8th, 2019. Your Options News Rundown. I'm Dan Passarelli, and don't forget there is a complimentary webinar tomorrow hosted by me at Market Taker Mentoring, and it is titled How Having a Checklist Can Add 20% to Your Profits. That webinar is at 10 a.m. Central Time tomorrow morning, and you can register for it for free by going to markettaker.com/list. That's market, like stock market, taker, like take something.com, markettaker.com/list. Trade well, and we'll see some of you on the webinar tomorrow.
The Options News Rundown is brought to you by Market Taker Mentoring, the leader in options trading education. Get trader education, daily trade ideas, and more with a free one-week trial of Market Taker Mentoring's Live Advantage Group coaching class by visiting markettaker.com/insider.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.